Bob Vassie. So please welcome Tim Power to the stage.
Thank you, Gavin, and good afternoon, everyone. I'm delighted to welcome Mr. Bob Vassie, Managing Director and CEO of St Barbara Limited, to be our guest speaker today. St Barbara is an ASX 200 Asia-Pacific gold producer and explorer that produced over 400,000 ounces of gold last year. St Barbara operates the historic Gwalia mine in Western Australia and the Simberi mine in PNG, and recently announced its planned acquisition of Atlantic Gold in Nova Scotia, Canada. Bob joined St Barbara as Managing Director and Chief Executive Officer in July 2014, his first time in the gold sector. Under his leadership, St Barbara has undergone an epic turnaround. When Bob joined in July 2014, St Barbara's market capitalisation was about $50 million, with a debt of over $400 million and a share price of 10.5 cents. And some analysts forecast that we'll be out of business within months. Fast forward 5 years, and the market cap today is approaching $2 billion and a share price of almost $3. Bob is a mining engineer with over 30 years of international mining industry experience. Prior to joining St Barbara, he was Managing Director and CEO of Innova Resources Limited, or formerly Ivanhoe Australia Limited, and Bob has 18 years' experience in a range of senior management roles with Rio Tinto. He has particular experience in operations management, resource development strategy, feasibility studies, business improvement, and corporate restructuring. Bob once defined good leadership values as showing good human values. And under his direction, St Barbara's hierarchy has flattened and continued its strong commitment to values, diversity, community, and the environment. Those who have worked with Bob value his down-to-earth approach, engineering and practical insights, and razor-sharp wit. On his appointment, he has apparently said that he was going to get into it like a dirty shirt on wash day. Away from work, Bob is an avid car collector, ranging from such gems as a 1974 Leyland Marina to his coal-powered Tesla. And Bob also holds Australian, New Zealand and British passports, as well as South African permanent residence, to help him maximise his enjoyment at the Rugby Union World Cup. As Bob lives in Brisbane and commutes to Melbourne, like a couple of other gold CEOs, he does not have time to do any of these things. It is all kids' sports and wife's show jumping events on the weekend. Members and guests, please welcome Bob Vassie to the podium and to the Melbourne Mining Club.
Well, thank you, and thanks everyone for coming. Thanks, Gavin, and thank you, Tim, for the introduction, and thanks for remembering Sir Avi, as everyone has this week. I'd like to thank the Melbourne Mining Club for inviting me to speak today, and thank the principal sponsors, White & Case and AMC Consultants, for making it possible. Distinguished guests, people at the main table, most of whom I know, ladies and gentlemen, this is not the forum to be a common or garden variety investor presentation, so I won't do that. Of course, I'll talk about some key aspects of St Barbara, but also I'll cover some of the broader industry themes. I just might put a plug in for charity here. I'm told there are quadrants in life: family, self, work, community. I think a lot of people around here today would realise that you sort of focus in on work and family. Sometimes don't do enough of interest to yourself and to the community. So if you like old cars, as I do, and you like driving around the countryside, you can do something for yourself, but you can also raise money for charity. So that's how I've tried to get those quadrants together. I can really recommend it. But when you actually describe to your wife what you want to do for 10 days, don't describe it as me time. It doesn't work. Get your nomenclature right. So moving into a bit about St Barbara, it's a good-sized mid-cap gold company, but with only 2 existing operations, they could hardly present a greater contrast. One is the oldest mine in the greater Kalgoorlie goldfields of WA. This is the Gwalia mine that many of you will know. And it's the second deepest mine in the country, and it presents formidable technical challenges as we go deeper. I should just point out a fashion statement here that that's me in the middle, and I'd prefer vertical reflective stripes. That'd make me look a bit thinner. So let's just see if Hard Yakka can remember that next time. The other is the Simberi mine. It's an island-based mine in the north of Papua New Guinea, which Papua New Guinea is topical at the moment, obviously. It's intimately entwined with its strong Melanesian culture, and it's like living in your own little world there, and it's going very well. Despite the fact that both mines could hardly be any more different, in strategic terms, they broadly present similar and well-understood mining challenges. That's how to grow reserves without collapsing margins. And we've all heard that before. In other words, how to harness new technologies and better ways of working, and more than compensate for the challenges that these resources throw up in our way. And for Gwalia, that's getting deep and lower grades, and at Simberi, it's more about changing ore types as you go from oxides to sulfides. Just a couple of words about our industry to put this in context. Being on the board of the Mining Council of Australia, and hi Tanya Constable, who's here today on the main table, I have access to some pretty good information and some very talented people. I'm continually annoyed at the repeated reference in political circles sometimes and in some media less familiar with resources, to the mining boom being over and the need to look at some sort of new information economy for Australia. What people sensed as a boom was in fact a construction boom. And that led to, and in fact, you know, when that stops, you certainly notice that the activity's heightened, and when it stops, you get a sense that something stopped. However, that investment gave way to a production boom, as you can see on this slide, where revenues, and actually along with jobs, increased. The fact is we need all types of industry in Australia's economy, but we certainly need the primary industries. I'm a new gold miner. I've been a long-term coal miner. Timing is everything, it seems. However, gold's mining position in Australia, in the Australian industry, is impressive. It's the third biggest industry behind iron ore and coal, but it's much more fun. Depending on how you classify industries, gold is the sixth largest industry overall in terms of export revenues, and it's very significant when compared to other well-known industries, as you can see on this slide. We're the second largest producer in gold behind China, and we have the largest reserve position in the world as a single country. So gold, Australia is a good place to be. If you're going to be elsewhere than Australia, I'd say Canada, for obvious reasons. Every gold miner faces challenges of dealing with ever-rising costs, resulting in margin pressure. The fact is that most operations can book reserves or extra reserves covering depletion each year, but we all know not all reserves are equal. A lot of reserves can be cut at just making $1. So you've got to look at better ways to mine, cheaper ways to mine, better technology and better ways of working, smarter ways of dealing with capital. These are the basic facts of our life. Or you can go away and find some more gold. This slide shows that gold at most times is punching above its weight in terms of exploration expenditure. It's quite impressive to see the amount of dollars going into the ground here in Australia. While we're third behind iron ore and coal for export revenues, it often accounts for half of all, gold often accounts for half of all exploration expenditure, truly punching above our weight. And this is something relevant to what we're talking about here, perhaps in Victoria with gold, is that I guess it's easier to find iron ore in the west and coal in some of the other basins than 1 gram a tonne of gold in the rock. In iron ore, you can pretty much explore with a shovel. There's a lot of it out there. In coal, if it's black, mine it. I know I've done all three, and I'm being a wee bit facetious there, but it's hard to find gold. So let's look at the global industry and then Australia industry with these basics firmly in mind. We're seeing a round of very significant consolidation. At the top end of town, we've all heard about Barrick and Randgold and Newmont and Goldcorp that are merging coming up. Arguably, both of these moves were triggered in part by shareholder frustration with modest long-term returns on one hand, and then also on the other hand, the promise of significant synergies. In Australia, though, the picture is a bit different. Our generally smaller companies managed the last gold price collapse and recovery with remarkable agility and some luck looking back. When we look at Evolution, Northern Star, Regis, Saracen, to name a few, they've made great businesses. Each has had somewhat different of a strategy, either picking up assets and making them great again or growing organically, but they've all executed their strategies really well, and they've had success in their chosen path. Growth, however, now is proving more difficult, and companies are starting to look overseas. Outside of Australia, it's North America and Canada that are persistently attractive as investment destinations, and this graph came to me from Richard Saywell in Citibank. Then, of course, there was St Barbara's own near-death and recovery experience, arising from an acquisition in the past that failed to meet its objectives. And, I've been in a few companies where that's happened. It's far enough in the past now that we could stop remarking on it, other than to say that a near-death experience, what doesn't kill you makes you stronger, has made a streetwise culture of risk management in St Barbara. I'll talk more about that shortly. The point here is that our recovery, the resulting cash flows, the continuation of strong performance, together with what our peers are doing out there, which has been quite impressive, has given the overall gold mining industry in Australia a positive investment rating relative to many overseas gold miners. And that's why we're all looking around to maybe use our scrip. Hence, we've seen Australia companies beginning to look offshore, where we can hopefully leverage our scrip, but it's always there is risk. And this stems from working in new jurisdictions. There's always risk with that. And the limits on, or the quality of, what's for sale, and so on. Not everything's for sale. Not everything's transactable. A new element, of course, is the chance that consolidation in the top end of town is going to release a plethora of unwanted assets becoming available. I guess, when you think of assets becoming available, when I've got unwanted things, I've got two options at home. It's garage sale or curbside collection, where they can take it away for free. And, that's perhaps not what we're talking about here, but we have to be aware of why those assets are for sale. But I think there will be some good ones. Northern Star, Newcrest, and now St Barbara have made a move to North America. 3 very different transactions. You'd have to say, though, so far deals have been few. More generally, the Australian industry has largely remained at home, working on maintaining margins of their assets, is consolidating only when it makes sense. There hasn't been too much of that. And striving to apply new technology and new ways to keep their assets in good shape and keep their cash flows going. And to brownfields and greenfields exploration in largely established gold provinces, however. This is precisely what St Barbara has been doing, but we had to do more. And that took us overseas to the recently announced proposed acquisition of Atlantic Gold, which I'll talk about shortly. Just thinking about Simberi, we've got a couple of ounces. I just wanted to show you a slide of Simberi. It's an ideal location. If you ever get there, the mud crab's quite good, the lobster. It's generated over $200 million in cash since we decided to keep it back in late 2016, with the mine life out to 2021, which is significant because it was meant to be finished a couple of years ago. And when you think about it, it's mining 1 and a bit grams of gold per tonne at a 2.5 strip ratio, so you've got to move a lot of waste. It's in a very remote area, running diesel power in the middle of the pouring rain, and we're making that kind of money. Someone must be doing something good, and the team there has done an excellent job. As we mine through the oxides, we get to the sulfides, and we're looking at a project to extend the life of the operation for many years. We're there, we like it, we know how to work in PNG, so we're working hard on that. When you think about it, we've already got the infrastructure. We've got the airport, ring roads, village, power station, but more importantly, we've got over 700 local Papua New Guineans who know what they're doing. There's only 28 expats there. So at any given time, there's probably only 15 expats on the whole operation. It's a credit to what they can do in PNG, and we're happy to work there. In any case, we are also focused on leaving something behind if mining ever stops. So we've set up, Tim Richards has set up a new landowner company that has set up things as diverse as plantations, market gardens, marine agriculture, sea cucumbers as it happens, and even a bakery. So that, you know, when we leave, the place is better off for mining having been there. And that's the true core of sustainable development. We've actually invested in helping the school and actually training adults that never finished school, so that supports the transition, so you have people that are more trained, more able to deal with that transition. By the way, I should mention a little plug for the aerial rope conveyor here. We'll just get that picture up. This is an interesting piece of kit. It's taking ore through the jungle over steep terrain for 2.6 kilometres to the coast. It's good for about 2.5 million tonnes a year at 50 cents a tonne. Hauling it takes $5 a tonne, and it generates power on the way down. How good is that? It's made by the people that do chairlifts in Austria. And it's in that environment over the years, it's really held up well. I could talk all day about Simberi, but fundamentally, when people talk about St Barbara, they talk about the Gwalia mine. Some people still call us SOGs, or Sons of Gwalia. And when you talk about the Gwalia mine, you talk about the challenges of depth. There's something else. You talk about the Gwalia mine, you also talk about what history teaches us. This is because it's not only Australia's second deepest mine and the deepest trucking mine in the world. We've got no shaft there. It's also Australia's oldest operating mine, depending on how it hasn't been continuously operating. But this gets very close to something which is very St Barbara. It's about the interaction and challenges of depth and the lessons we've learned from our history. The original Mount Leonora discovery was made in 1896. Production happened only a year after. That's 123 years ago. Herbert Hoover, then mine manager, was instrumental in the float of Sons of Gwalia, limited on the stock exchange in London in 1898. Since then, Gwalia mine has produced roughly 5.8 million ounces of gold, 2 million under St Barbara's ownership. Now that sounds pretty straightforward until you realise what a rocky ride it's been. Over the 123 years, it hasn't been plain sailing. Gwalia and its shareholders associated would have had periods of good returns from production of a fabulous resource, but for most of its life, no one knew how good that resource was. Colin Wise is in the audience today. He was our previous chairman, and it was a fantastic opportunity that him and others grabbed to get a hold of this off the receivers, because we know from the cash flow generated nowadays what a great asset it was. The mine was actually on care and maintenance for 20 years, crippled by an internationally regulated commodity price back in the day. Twice the workforce went off to war. That does have an impact. Once the plant was largely burnt out. Hedge book risk, which most of you will know, then famously took off another set of owners. Our own company, St Barbara, succumbed to the siren song of acquisition and debt and experienced a near-death experience as recently as 2014, which could have seen this fantastic mine in the hands of the receiver again. Apparently, there was a case study on how not to do hedging after the Sons of Gwalia experience, but I think there's a couple of case studies there, just how well St Barbara picked up that asset and the time, and also perhaps a case study about the acquisition that followed it into the Pacific that troubled the company. I will note at this time, when I joined the St Barbara in 2014, as I've said before, I didn't have a magic wand. We had to let some good people go. We halved the corporate head count, but we didn't add any new people. And the people that were in the business when I arrived turned the company around from actually 7 cents to a peak of $5 something without raising. And for that, I'll be forever proud and forever grateful. Since then, of course, Gwalia Mine has increased tonnage production. Its improvement hasn't just been grade, but it is mining through a sweet spot in the ore body between 1450 and 1750 metres below surface, allowing us to pay back $400 million of debt and invest in our future by going deeper and give ourselves further mine life at comfortable margins, but at an optimised risk. I think more horizontal stripes, we'll try for vertical. A review of our history is an appropriate introduction for a discussion on our current major challenge, which is the challenge of depth. We're the deepest trucking operation in the world. It's about 1660 metres down to where we're mining now. So if you're going down a spiral decline, that's about 12 kilometres down, 12 kilometres out. It's actually taking people in a truck driving around a dark roundabout an hour and 3/4 to get out, and then they dump their load, and then they realise they have to go back down again. So obviously, if you see there's a better way, you're going to look for it, and we know the ore body extends at least to 2,690 metres, which is where we've drilled one hole to at least, and there's a proposition to extend the mine life. Our current mine life is 2031. For a time, we thought there was a better way than trucking, and we pursued it until it didn't work for us. We were attracted to underground crushing and perhaps milling underground and slurry pumping options, although we assessed an expanded trucking operation at the same time as a base case. I mean, how great would it be if you could use the downward pressure of water to lift the dirt up in the slurry 1,500 metres, save energy, instead of trucking slowly to the surface. By expending some capital, we could reduce the operating cost, we could drop our cut-off grade. Our cut-off grade's about 4 grams a tonne, which is other people's head grade. There's perhaps another opportunity for us. We called this Gwalia mass extraction. The objective was to double the tonnes out of the mine as grade declined over the years to the end of current mine life. Typical of innovations, however, the more you study them, you realise the costs of mitigating the risks of innovation. Now, we've all seen pre-feasibility studies go up when you get to feasibility and up when you build them, but with innovations, it's a bit harder to estimate. Soon, our capital estimates for the construction of making pumping and grinding work underground doubled. And also the impact of building all the stuff underground on existing production was quite severe. So we've got to look at risk. So looking at risk, but also looking at plain net present value, the flexibility of continuing to truck rather than anything else won out. There's less disruption, there's more flexible, less capital, and essentially we're trying to do now GMX by trucking instead of pumping. And that's if we can demonstrate higher development rates and production rates when we double the ventilation at the end of this year. So in January, we're looking to double the ventilation from 450 cubic metres a second pumped into the planet, with chilling to boot to keep everyone cool, to 900 cubic metres a second. I'm going to have to buy the people down there new coats. It's going to be so chilly. But anyway, it's all about value and risk. So we have taken a prudent course, and for which the market has rewarded us accordingly. Took a bit of hit there. Anyway, there's an element of risk involved in innovation, but we're no strangers to it at St Barbara. It's what's got us to depth at Gwalia. We have adapted absorption refrigeration technology, so we're using the waste heat of the power station to make cooling to pump underground. You'll have to look that up and how that works, but it's amazing and it saves a lot of money. To change the economics of our deep operation, and we don't want to be pulling waste all the way out of the mine for an hour and 3/4. So we're now building this plant underground to crush the waste and mix it up with paste and fill our open voids so that we don't have to truck it to surface. That's quite novel and innovative. As I said, we took a bit of a hit when we announced we weren't going pumping. However, I'm looking to get a fair bit of that back. Next year is a bit of a transition year for Gwalia. Half the year we don't have ventilation. We have to make choices of what work we can do and what we can't. And then when we turn on double the ventilation, we've got a backlog of development to re-establish the GMX footprint of what we want to mine in the future. We have also sought to broaden our portfolio through the time-honoured mining company technique called exploration. We're doing greenfields and brownfields, but I should point out we're doing this throughout Australia. But we have a great lounge package north of Gwalia. It goes all the way through Tower Hill, Harbour Lights, King of the Hills, Sinclair, Jaguar, Bentley. It's 60 k's of strike, and we haven't explored it by modern means. So that's a great opportunity for us, and if we could, I say to the people, consider that a junior company and we'll give it some funding. What would you do with that patch of ground? And there's a lot we can do. We never used to have the money. Then when we got the money, we're putting deep holes into Gwalia. Now those deep holes into Gwalia that extended the life, one hole can be upwards of $1 million a piece. So that's where that money's gone, and now we've started to look regionally and it's looking encouraging. But beyond our own programs, there's something else. And it's all about how exploration gets funded in this country. And you could see those big numbers I presented on a previous slide. Sometimes the stock market's not backing good small companies with good land positions. And so we've taken up the opportunity ourselves, either through operational or investment partnerships. We have a JV partnership where Newcrest is earning in on our ground in the islands next to Simberi in Papua New Guinea. We also are earning into Australia Potash's ground, or their gold ground, in WA. Then when we were looking for opportunities, we decided that we would look for really good ground that was being run by really good teams, efficient junior teams. And to that end, we have a couple of investments. In Victoria here, close to home, Catalyst Metals, 14%. Hi to Steve Boston, who's here today, doing an excellent job with the team. In New South Wales, Peel Mining, 18% of that company. Northern Territory, we've got Prodigy Gold, 10%, and WA Duketon, 12%. I'm looking for Queensland next, and if I can get anything in New Zealand, I'd look there too. I'll have to just make sure my accent doesn't slip back to a Kiwi accent. We're not alone in funding or supporting strong exploration teams, but it seems the market's not always there. People think the low-hanging fruit's been picked. We don't think so, and we think that's a great opportunity, and some of these small companies have great ground. I'll now briefly touch on this lovely picture here. Our recent announcement of the proposed acquisition of Atlantic Gold in Nova Scotia, Canada. At question time, I want someone to give me a name of a song with Nova Scotia in it. It's one of my favourite songs, but it doesn't reflect on me. We'll get there later. I'm very pleased that we're looking for a smooth integration here. We don't get the keys until late July at the earliest, but the team there have allowed us to get involved early to plan integration. And to that tune, I'm flying next week to Halifax. Turns out, I live in Brisbane, work in Melbourne. Yeah, I know it's not good, but turns out you can fly out of Brisbane, you can turn left or right. You can go out to Vancouver or LA, New York that way, or you can go Abu Dhabi straight through to Toronto, which is what I'm doing. You can just select what service level you want on airlines, which is topical at the moment. So why did we elect organic growth in Canada at this time? Because in simple terms, for St Barbara, Atlantic ticks all the boxes in our published strategy. Now, we've had this strategy for some time and it ticks the boxes. And as I've said, Canada is probably, to me, the next best jurisdiction outside of Australia. Our strong conviction is growth, first and foremost, needs to be strategic. We've taken a very disciplined approach and a lot of things we've looked at in the last 2 years have not met our strategic criteria. I've said for some time we needed to diversify our production, and that's obvious with a deep mine in Gwalia and options to extend Simberi that we still have to decide on. So to me that meant about 200,000 ounces of diversity, and I thought I'd have to do that in 2 chunks. And I knew that it was likely that we would dilute our margin because we've got good margin in our 2 current operations. But I'm excited about this opportunity because this opportunity has already existing production in the lowest quartile or decile in some cases, depending how you look at it, of all-in sustaining cost. It's transactable, has a strong growth profile going out past 200, so there's my 200, in a stable and attractive mining jurisdiction. What's more important is it's already got a credible team there that delivers. I don't have a bench strength that I can just parachute into somewhere. I need the team there to deliver, and they're delivering well. So I'm going over to meet them next week. Associated with this acquisition, we used our strong balance sheet. We had close to 400 million in the bank, having had 400 debt not so long ago. And that's been through the strong operating performance of the team over the last couple of years. And we undertook a significant capital raise for us, 490 million, with the team at Deutsche Bank, who did a fantastic job. And we improved our liquidity headroom with a new 200 million facility with Westpac, which is undrawn. This got noticed in Canada. If you know the Canadian industry, all the money's going to the pot stocks and not to gold. So we got some comments back from other Canadian banks saying, how could these guys raise that much money for a Canadian asset when we can't raise a dime over here? So the Australians and the Australian fundraising has been noticed. The key for us is, given our share price and where it ended up, we went from 520 to 320 after the non-pumping announcement, and as you say, I'm after getting that back. Then we had to, offer a discount for the rights issue or for the accelerated non-renounceable entitlement offer, which is already closed for the institutions with oversubscription, and is closing for retail on the 4th of June. If we've got retail people out there, myself and my wife are already digged in deep to contribute. But, with that share price, we wanted to keep it to our own shareholders, so that's why we've raised the money to do a cash deal. We know it was competitive. There were other people on our shoulder in this thing, and I think it was cash and the fact that we wanted to retain the team that won it out for us. We've preserved the balance sheet, which allows us to continue our organic opportunities, which now include organic opportunities in Nova Scotia. While our shareholders took it up really well, our shareholders really bought into it, we got the full range of analyst outcomes, and I've got 2 of my dearest analysts here. But in the universe of analysts, 2 stayed buy, 2 stayed hold, 2 went to sell, and 2 were excluded because they're involved in the deal. And that's life. That just shows to me that I have to prove what we're doing here and why we're diversifying and how the cash flow is going to come from day one. We could have looked at Australia, but as I've said before, we looked at some small assets. We opened up the hood. Half the cylinders were missing. Close the hood, move on. 6 months later, maybe the market sees that. There's the merger of equals, or the new theme, the nil premium merger of equals, which not everyone's equal. There's all been tried amongst the gold players, and nothing's happened in Australia on a meaningful scale. Relative valuation, so social issues abound. I know it's a bit different, but imagine starting marriage discussions with your prospective partner, pumping up your own attributes and picking holes in theirs and downplaying theirs, or potentially highlighting the risks of a union. It's a race to the bottom. You're not going to win like that. You've got to look for the opportunity. I'll finish now. I think I'm pretty much getting out of time by highlighting a couple of pet themes about the industry I love. And, why do I love it? Well, not only that you rely on this mining industry for pretty much everything you need other than food, but it's also because the resource industry offers such a diverse range of opportunities for people. and quality and diversity of people that you meet in this industry is just fantastic. Still, it appears we've got a bit of an image problem. This slide here is an example of the decline. This is from the MCA, a decline in mining school intakes, a real opportunity here. One I exploited when I left school, not knowing what I really wanted to do, and I didn't have top marks. So I wanted to do engineering for people that couldn't do maths, and that's where I ended up. And I've been pretty happy with it. Instead of having to build things, we can blow stuff up. I recently said to my 17-year-old son, you're going to be competing for top spots in top universities, so you've got to try hard. But how would you like to gain entry into a top university in Australia with nil competition, get funded to do the course, and come out with a job north of 100K? Yes, you'd like that? Well, do I have a solution for you? It's called mining engineering. My son replies, yeah, but it means I'd have to go work in the bush. My point is, and you can see this is also from the MCA, if you ask young people about mining, these are the words that come out in that collage, and there's a quote there at the bottom. My point is broadly that including the talent we want to attract, people broadly simply do not understand the breadth of roles and the opportunities in this important primary industry. The MCAs and others have done a fantastic job, but it's in the stiff competition from opposition, marketing, the new information economy and other things. We can't have new age economies without food and things to cook it with and things to cook it in. Our people can be our best advocates here. It's not all about engineers. Mining engineering is just one example. It's about lawyers like Colin and accountants and, dare I say, organisational psychologists. And other professionals that make it all work and make it a great industry to work in. One other theme, diversity. I'm also on the AusIMM Council for Diversity, and I'm an ambassador for the Workplace Gender Equality Agency, which is a government agency. Great work done before I joined St Barbara that we are now continuing. We're the only mining company in Australia that is awarded Employer of Choice for the things we do, ranging from how we recruit without bias, parental leave, flexible work arrangements, and that's just one company in 141 Australian companies that have gained that recognition. How many companies apply? Every company with 100 people or more in Australia have to put their stats in on pay equity and other things. So I encourage mining leaders here today that are running companies to just look at how close you are. You're probably pretty close to having that award or that recognition, and you might just have to ask your people, what's the last thing we have to do it? And I say this all the time, but please have a look at it. Anyway, the one last thing is everyone here knows that value comes from the resource in our industry. I worked in Rio Tinto, and those guys there, and I worked with it, developed a program for senior leaders about how resource risk relates to value risk in your business. And so everyone's familiar with a safety engagement or a safety observation, that you engage with people at all levels in your workforce as a senior leader on safety. It's excellent. It's doing a great job. How about engaging with people at the shop floor and throughout on value? And the easiest way you can do it, if you're a lawyer or an accountant running a business, or even a mining engineer that's forgotten about mining engineer running a business, is to ask about reconciliation of the ore body. Go out to a junior geologist as a leader and say, what happens if we get the sampling wrong? Ask them about how it flows through to value. Go to a senior mine manager and ask them about how the ore body is reconciling to production. Is it positive, or why is it positive, or why is it negative? And then watch the colour drain from their face. But at least they'll know you care. So anyway, you never stop learning. I've learnt more in my last 10 years than in the first 25. I think I'm a bit of a slow learner anyway. I'd like to thank City and the MCA for some of the data in these slides, the St Barbara team and board, and our previous chairman, Colin Wise, who actually hired me. So I've got to say thanks for that. It's been painful but rewarding. I've covered a lot of ground today, so I'm happy to answer any questions on what I've covered and on St Barbara.
We'll work together on this. Well, thanks, Bob. We're going to take some questions from the floor. Richard Shoddy's over here. He's got a microphone. Sam Street's got one. I think Jeff McDermott, you've got a question?
Yeah, hi.
It's working, Jeff.
Great talk, Bob. I just wanted to, as an industry leader and based in Melbourne, a hot topic at the moment is the gold tax that's being introduced here into Victoria. I just wanted to ask your opinion on it, and would it have any effect on your investments in any company that has projects in Victoria?
Yeah, I sensed I might get that question. I actually chair the Gold Forum as part of the MCA, and we make that open to CME members over in WA, and St Barbara's a member of both. And as you know, there's been a lot of work on the WA gold royalties. What I'd say in the Victorian case is it's a disappointing lack of consultation is a key issue here. We all understand in gold and other minerals that you've got to pay your way, whether that be royalties or tax or payroll tax, but it's got to all be taken into context with that tax regime and the structure of the industry. Here we have a bit of a problem where it would seem a bit of a grab for cash because the Victorian gold industry is trying to get going, and it's really in three parts. Explorers like Catalyst that we're part of, having to drill through 30 metres of cover to sample the top of basement to find a few grams of gold to look at where to go, and that's taking many years. You've got some the operations that have a very thin margin, of which a royalty that comes off the bottom line just makes them no longer marginal but out of business. And then you've got one mine that can probably afford it. So if the government had bothered to consult, they might have made a better plan. And I'd actually call on the Victorian government to just take a pause, engage, talk to people, and we might get a better equitable outcome. I also note that there's a couple other, there's usually other grabs for cash, and I see in Queensland, I'm a coal miner by trade. Queensland have sort of come out with a voluntary sort of levy to raise money. The only voluntary levy I know that works is gold coin donation, and that's probably something to think about. And the other thing I think that's come out of there is a luxury car tax. As I pointed out, I like cars. Why should I be taxed for my passion? But if my passion was luxury boats or handbags, I wouldn't be taxed. So just a punch for the car industry, or for me.
Bob, a question through here.
Hey there, so I'm Matt, a student from the University of Melbourne. I was just curious about how you go about sort of promoting student engagement, especially obviously in the mining sector with that last slide that you've shown that sort of all of this is decreasing now. So how would you go about promoting student engagement and involvement in industry and onboarding once you're there? Yeah,
look, there's a lot of work in that area, and we try and do it not only as a company, and we're a relatively small company in real terms, but we do it through all the organisations. We do it through the Gold Industry Group, we do it through the CME, we do it through the MCA, because that's a way of magnifying your voice. A couple of the things that have been done out there, and Meryl from St Barbara's in the front table here, she's been leading in the Get Into Resources program in WA, which is targeted at getting students finishing school to understand that the industry's out there and it's not just picks and shovels, it's a diversity of opportunities and roles. We are introducing through the CME and Gold Group syllabuses to schools to make them more aware of the contribution of the resources industry and the types of roles and opportunities and professions. It's not just mining engineers and geologists and metallurgists. So we really try and leverage off those groups, and there's been some pretty fantastic work. But, as I say, it's in the face of competition to people saying, Australia must move to the new digital economy and sell jobs that way. And really we need all those opportunities. Now, you will see heaves and swells in those intakes, but I'm doing it in all the people I engage with in the schools that I engage with, but it's really largely through those peak bodies that we're getting some traction.
Hi Bob, Janity from AusIMM at the Melbourne Mining Club. To follow on from the previous question, you referred to peaks and troughs in the cyclical nature of the industry. The peaks of university intake does not really align very well with the peaks of the industry. Is there a way we can make that a little bit more stable, or try and actually make sure that both of them are a little bit more in sync? Do you think there's a solution to that?
That's a hard one because, I came out, I got a scholarship. I was in New Zealand at the time. I was pleased to get a scholarship from Mount Isa Mines. And I was was a VAC student with Mike Slaversky, who's here. When I came out in start of '85, they just weren't taking people. And so I'd come in and got all these VAC work jobs, got scholarships, got through and didn't have a job. So I went to South Africa and, they took me sight unseen. I just had to get a photo of me in my underwear doing this, send it to Anglo American, and then they took me. That's actually true. I was horrified to realise that after I sent the envelope to Anglo American, that the stamps on the envelope were New Zealand stamps commemorating the Boer War. But either way, they gave me a job. So planning that cycle, because I think the mineral cycle isn't a standard cycle, and our efforts to try and get people on the intake, I think just have to be there all the time so that people know there's a cycle. But right now, if you get in now, what's the cycle going to be? It's going to be pretty hard to plan. I would point out, as I've said before, if you're short on mining engineers and you want diversity of people, including gender diversity, go hire civil engineers. They're mining, a lot of commonality in the course, and they can probably do maths a bit better. Someone suggested to me that you take a civil engineer and give them an extra year to qualify as mining. I reckon you could give them a year off, and just hire them straight away.
Bob, we have one last question in the same area.
Yeah.
Hi Bob, I'm Renee from RMIT. I'm a student as well. I just wanted to ask, what do you think are the advantages and disadvantages of leveraging emerging technologies like AI in mining industry? Thank you.
The advantages abound and everyone's getting into it, and it's anything from big data to topical things at the moment of sensing and sorting to upgrade your ore feed. Everyone's getting into it. Not everyone wants to be on the bleeding edge. They want to be fast followers. And sometimes, you can turn waste into ore from that, which is, profound for a lot of operations, especially operations looking to extend their lives. But there are some disadvantages in terms of how well you can adapt these new technologies. I talked about risk before, where you have to try and do a net present value of your options of taking an ore body further in its mine life. And you've got to risk rate those options as well. And new technologies do have their own different risk profile. When we looked at milling underground and pumping to surface, we looked at 3-chamber pipe feeders, which is new technology, but just a bridge too far at the moment. If it was in 5 years' time, we probably think we could do it. Big data coming in, the wealth of data we have, if you can just capture all your data and ship it off somewhere else and have intelligent people looking at around 24 hours around the world, looking for patterns, looking for opportunities, artificial neural networks, sure, it's going to work. I think the real opportunity is understanding what the opportunities are and what the risks. And it's all about execution. It's like strategy. If you can come up with a great strategy and execute it poorly. In fact, most strategies end up on the shelf in a document and they're executed poorly or not executed at all. It's the same with innovation. If you come up with good innovation and have a good innovation roadmap, it's how you execute it and balance the risks and the opportunity.
Okay, Bob, just stay with us here for a minute. Ryan, could you turn the lights up for a sec so we can see the room? Thanks. Or Nathan. Now, of course, Bob was asking us about a song with Nova Scotia in it. Does anyone in the room have a clue? Put your hand up if you do. Now sing it. What is it?
Yes, that's right.
Carly,
I thought you would get that, Phil. So that's
Carly Simon, You're So Great.
okay. You have to now say who was she writing about? No, not me.
Warren Beatty.
Oh, gets the gong. Well done.
I'm going to take your gift after that. The other thing, of course, members and guests, is that we talked about PPE and the vertical stripes. We've got two guests here in John and Caroline from Workwear today, and they assure us that they're already making it, but it's mostly used at Beechworth and Barwon Heads. I'm not sure what's out there, but no doubt we'll work out more later on. So, members and guests, what I'd like to do now is to call on Patrick Smith from AMC Consultants to propose a vote of thanks to Bob. Please welcome Patrick to the stage.
I took too much time, did I?
No, you're fine.
Thank you, Bob. Thank you for a most interesting presentation with a broad focus on St. Barbara and the gold mining industry. A theme that resonates for me is St. Barbara's near-death experience, an experience that reshaped the company. Businesses do not stand still in a moving market. Decisions are made, outcomes vary, and sometimes things don't go well. The strength of a company, the strength of the leaders at a company, is seen in the successes that follow a setback. As evidenced by Bob and his team over the past 5 years, St. Barbara is going from strength to strength. Members and guests, please join me in thanking Bob Vassie. We now have a gift for Bob.
Thanks very much. What might this be? Oh. Thank you. Thanks very much. I might take this with me to Nova Scotia and find some more gold.